And welcome to another Leumi Financial Corner. With us once again, Michael Zaremsky, head of U.S. Private Banking, Bank Leumi USA, member Investment Committee for Leumi Investment Services. Michael, good to have you back again. How are you?
Great to be back, Zev. Thank you very much. Hope all's well with you.
Thank God, thank God. Been a month of holidays, so now we're going back to a regular schedule. So, speaking of holidays, when we spoke at the beginning of September, I mentioned what some people have called the Rosh Hashanah factor. You call it the September factor, where traditionally speaking, the month of September is usually volatile. So my question was, now we're at the end of the month, how did we do this September?
Zev, that's a great question. And as you said, last time we spoke, we discussed market volatility, and we did, in fact, get it. So before I kind of go into some explanations of what we've seen and what we anticipate, let me just remind everybody that the views being expressed are mine, not necessarily those of the broker-dealer or the bank. Clearly, September saw some uncertainty, and I think one of the ways of measuring that is always the VIX index. Throughout most of the summer, the VIX index, which is a measure of market volatility, was under the level of 20. I think it had averaged somewhere around 18. We've seen a pretty decent spike up in the month of September, and generally speaking, it's been at, above, or hovering near 20 for most of the month, and we're currently sitting somewhere at around 23 as we speak right now. The reasons for uncertainty, as we spoke last time, were that a lot of the normal market influences, like an earnings season or earnings reports or some of the other type of economic data that comes out, are in a lull. And what we are looking at right now is a calendar that's filled with a lot of interesting government activity, particularly some of the bills that are being discussed in Washington, D.C., which include infrastructure, the bigger, broader reconciliation package, as well as funding for the government going forward and debt ceiling. So 4 really big items that all do help to create some uncertainty. And that fiscal element ties into what we saw at the beginning of the month, which was a lot of fears and concerns about the Delta variant. And then also coming into the end of the year here, as we've been anticipating for much of 2021, is what will be the impact of central bank policy as we move forward. So when we think about it, markets right now for the month, as we kind of close out September, broadly speaking, broad markets down about 2%, and the more technology-oriented you are, the more that they're down, and in some cases close to about 4 or 5%. However, for the quarter, markets are flat to slightly higher, and we still retain, very positive mid-teen, double-digit year-to-date equity returns in most major U.S. indexes. So while we have had a little bit of a pause, we have seen some volatility. Again, I think there's very much a high degree of confidence in the picture going forward, and we haven't really seen that massive sell-off that many market prognosticators have been calling for. I think a lot of that reason is because of the massive amounts of liquidity, the very strong economic data we've generally had, and a lot of that is fueled by productivity gains in corporate earnings. And I think we've talked about a lot of those themes. So what we're really seeing going forward is a change in regime that I think is largely, again, dictated by monetary policy. I'll also add that, again, depending upon how you're viewing the data, a lot of the issues around the Delta variant seem to have peaked. There are a lot of indicators that are starting to have Delta variant pointing downward. Positive case trends have declined. And again, it seems like, as with so many of the other surges of COVID virus in the past, it hits a peak, it comes down, and we kind of go down back to another level. So assuming that that is the case here with Delta, some of the other items that are up for focus again would be fiscal policy, which again, in many ways, watching the process play itself out in Washington on these bills can be quite cumbersome. And we'll see how that all plays out in the next couple of weeks. And far be it from me to try to guess which way the winds blow in any of that, other than to say that I'm fairly confident that there will probably not be a government shutdown, and I'm fairly confident that the United States will not renege on Treasury debt. Has not happened in the past, and it would seem that the politicians in D.C. have ample opportunity to work through those details. What I do think is a big driver in the markets right now, again, goes back to monetary policy and what the central bank is doing. And in September, again, as we've generally speaking anticipated, we continue to get closer to the time period where they are thinking about tapering, and our expectation is that they will start to ease the gas up on the accommodative policies that are in place. So the expectation right now, per market estimates, is that we will probably start to see elements of tapering the bond purchases. So again, slowing down the rate of accommodative policy into the market. That will probably start December or early first quarter, assuming there's no major changes to economic data. And the expectation at this point is that they will probably take the foot off the gas pedal by about 10, 15, $20 billion per month. And the expectation is that they will go from $120 billion a month of accommodation down towards zero some point mid to end of next year. And after that process is done, they've told us that they will start thinking about the process of hiking interest rates. So we are a long way away from interest rate hikes. Again, we've moved up slightly in our timetable, and the market is expecting the potential for a late 2022 rate hike, or if not, early 2023. And again, we'll go through that process as we get deeper into the year. But generally speaking, I think the little bit of volatility is good for the market, and we'll see where we continue to play out as we go forward.
And certainly, so while we had volatility, things straighten out, and that's really what you're saying. Every year we go through this whole tumultuous period during September, and things move forward once the month is finished, which we're at the end right now.
That pretty much sums it up. And I think the one area of concern that we're also seeing in the market right now is, again, no conversation will be complete without talking about inflation. And, where are we seeing inflation? What is inflation? There's a lot of open debate about those topics. But clearly one of the areas of concern for many people right now is the run-up that we're seeing in energy prices. And a lot of it is also tied into some of the supply chain issues that we're seeing for products, freight goods coming out of the Far East. And that's something that is definitely on the horizon. It's something that we're concerned about. Other elements of inflation seem to have peaked a bit and seem to have come down. And we're still in this argument and debate about how much of the inflation that we're seeing, and again, some of the headline numbers are around 5-6%. How much of that is truly transitory? How much of that is going to be persistent? And again, just to remind everybody, the Fed's goal is to have some of it be persistent and anticipate that some of it will be transient. So again, on the energy front, oil prices are one of the areas. So oil, energy, commodity. So again, food and gas for a household have been increasing in price. There still continues to be a lot of pressure on the wage inflation concerns, as well as supply chain. So we will continue to monitor those. That's also probably part of the reason why we're seeing interest rates rise. And, when we check back in a couple of weeks, Ev, we'll hopefully be able to give you a clearer picture on how everything shapes out from the Fed, what the pathway of Delta variant is, which hopefully is a continuing move down. And then we'll also probably at that point have a little bit more clarity on the major bills running through Washington, D.C. at this point.
Michael Zaremsky, head of U.S. Private Banking, Bank Leumi USA, member investment committee for Leumi Investment Services. Thank you for being with us. We look forward to picking up on that point next time we speak.
Thank you very much, Zev, and have a great day.
And we're going to be right back. Don't go away. Stay tuned.